Hey, welcome to the podcast, everybody. Thank you for joining me. Appreciate it. It is market's closed. It's February 27th. It is a Wednesday, and the zigzag continues. I think a lot of people may be getting whipsawed in this market. The market was, of course, down dramatically on Monday. Had a couple of down days last week, and then we come back, have a mediocre day yesterday, really, and then today had a very, very strong day. And the Dow finished up 175 points today, about 1.25%, but and the S&P was up about 1.25% as well, about 19 points. Now, a couple of things that stand out to me right off the bat. Number one, if we kind of look inside the numbers here, we can see that the volume was lower today than it was yesterday. So we're seeing volume decline, even though we had a big, strong market, today with basically every sector going up. Volume was down. We have had two of those 90% down days, and I'll zoom in here a little bit, and you can see it was day right here and right here. These are 90% down days. That's something that, again, the red flags are saying, hey, if this market's going to roll over, that was the time to mark. You mark that, and you say, okay, I'm gonna mark that with a little. We'll mark it with a box here, and say this is the time that something changed, going back, at least to 2012. Something changed, and I think if this is the time that it does eventually roll over, we'll look back at that and say we had a little bit of warning. We had a couple of 90% down days that aren't extremely rare, but there's something that doesn't happen every day, and I think. So we'll look at that, but here's the thing. We drew this last time with the support, and you can see the market bounced right off of it. Very, very convenient, and we said if it broke through that, it would probably go down to this old breakout level, and then if it broke through that, maybe the 200-day moving average. It held the first support. So that's good, and really in the last couple of days, I haven't made too many moves. I did get stopped out of financials yesterday, and kind of averaged out of them all day long, so I didn't sell at the low, basically averaged out as it was recovering part of yesterday, but really felt like the financials were very susceptible to a fall. They come back today, and we're obviously up with everything else, but it never hurts to take a profit. What you don't want to have is a profit that turns into a loss, and that's something that frustrates every investor, every trader. So took a little bit of profits yesterday, but I think, remember, we've talked about this in prior podcasts, that this is a very dangerous market to short. It felt like in the last couple of days that, boy, it has to go down. Everything's just makes perfect sense. And you had guys on TV and on radio saying, we're 100% cash, and we're totally out of this market. It is going down. And then you come back today, and, the market races up. So you have to not be an all or none type person, first of all. And second of all, in a market like this where there's still strength overall in the big picture, which we've talked about. We talked about a correction possibly, but not the beginning of a bear market. In that scenario, very, very difficult to short unless you've got extremely tight stops, or you're very, very, very nimble and you're able to just nickel and dime the market. But for most people out there, you want to take some profits, fine, but go ahead and sit in cash while you do it. But this is more the picture I think we should all be looking at. This is the S&P 500. It's an hourly picture, so you're getting a different frame of reference than just looking at the daily picture. Because what we know is that it feels like the market has had a couple down days, had a couple of up days, and it has. But this is what I'm focusing on: is if the market is in the process of a deeper correction or correction at all, it's going to happen, I think, pretty quickly. Because if you look at this hourly, we have gone up, we've retreated. It's kind of two steps backwards, one step forward, and then we go back up to so what we're doing is we're making lower highs and lower lows. It's just you have to zoom in and look at it from a different angle, use a different lens. And so what would be likely, and tomorrow's the last day of the month, so people are maneuvering their portfolios sometimes on those days. But what would be likely is if this thing's going to roll over, it would start to do it right away, and we would head back down and maybe start going down like that. Now, here's what we need to be looking for tomorrow. Today was a reasonably good day, but the volume was lighter than it's been. What we need to see is an expansion of volume stronger than today, and another day where the majority of the sectors are up, majority of stocks are up. It's just the intensity of the rally is there. That would get more people on board. It potentially could take the Dow up to its old high, the pre financial crisis high. So we're at a kind of an interesting pivotal point. But again, tomorrow's the last day of the month, and so what happens tomorrow? It doesn't necessarily dictate what's going forward, because you could see some type of reversal for that, going into the next month. But I think we're at a critical point because the market rallied right up to this point here, and could head down. Again, if it breaks out, fantastic. But some people believe we're going to go to the old highs, and that would be somewhere up above 1550 plus. So we're not too far away from that, and we talked about that a few podcasts ago, that it's just logical that you would go there. One thing that I think people should be a little cautious of is assuming that the past may look like the future. And what I mean by that is in the last, let's call it 10 years, 12 years, the S&P has had these big gyrations. And so I think some of the bears out there, what they think they may see going forward is that we're going to go somewhere up here, and then we're going to sell off, and we're going to come all the way down, and maybe that's back to 1,000. We're going to have a 35% correction. What if we just drifted sideways? What if we went up a little bit, came down a little bit, went up a little bit? This pattern here of going up and down and up and down, and these are moves of 50, 60%. Will that continue? It might, but let's look back at history. I mean, this is going back to the 60s. We do have some precedent for some of these types of moves like we are now, but and we're dealing with bigger numbers now. But going from the 80s through the 90s, granted that was a bull market. But even if you go back prior to the 30s and 40s and 50s, there are periods where the markets don't have these huge gyrations like they're having now. Obviously, we could argue that with technology, the gyrations and the volatility aren't going to go away. They're going to maybe get worse, and that could be true. But I think when you're looking at setting up your systems, you're thinking about what kind of portfolio you're going to put together and strategies. You can't just look at where we are today, and what kind of market we're in. We have to look back at history. We also have to look forward to some degree and kind of say, what if it happens? What if this happens? And so, again, it would be very simple and easy for this market to top out at its old high and then roll over. It may happen that way. But again, what I prefer to do is to examine the market where it is, and then go from there, and not be so thinking that history has to repeat itself exactly like it did in the past. Okay, we talked about and by the way, one of the strongest sectors today, transportation. This is something that has been doing really well. Looked like it was rolling over. Very strong today, up about 3% on the day. Some of the rails getting pretty strong now. Some people are looking back at this from a weekly perspective and suggesting that perhaps this thing is at a long-term top and it's going to have to go down. But again, kind of like the market, maybe it does, maybe it doesn't. We have to play each day as it comes. So, but transportations were very strong today. Transportation was very strong today, and those stocks in there. From an economic standpoint, people look at that and say, hey, this is great. Transportation's doing well, but on the other side, commodities have been retreating. Oil's been down a little bit lately, and commodities aren't doing well this year. So that's very good for you and me, and we can end up buying more stuff that gets on the trains and planes and automobiles, and so the economy should actually do better in that scenario. I think the bottom line in the last couple of days is that Bernanke told us what we've been talking about here for months, is that he's going to continue to ease. He's going to continue to keep rates low. He's already told us that, and he's going to continue to buy tremendous amounts of bonds. Right now he's buying $85 billion per month. Some people fear he may slow down. Well, so what if he slows down to $75 billion per month? He's still stimulating the heck out of the economy. Or I should caveat that and say he's trying to stimulate the heck out of the economy. He's going to continue to buy bonds. That we know. And so the Fed can jawbone all they want, but at the end of the day, they're going to keep doing what they're doing. And the market likes it. And you don't have to go too far back. Just right here, which was on February 20th, that was just 5 or 6 trading days ago, that there was some talk that the Fed might slow down. There's some rumors from their minutes that they might. Some people don't like what's going on, and the market just had a hissy fit and had a 90% down day. That just shows you how addicted to this easing the markets are. Now, again, that's a bad thing, but our job's to make money, and the market likes what the Fed's doing. Just look at the results of the market. It's going up, even though all these big bad things are supposed to be happening. So he's going to keep doing that, which means the markets probably could continue to go higher. We talked about McGraw-Hill the other day about that. We wrote an article on the blog, karleggers.com. If you haven't seen it, go check it out. We talked about it. We bought it down in here somewhere, not really for a trade, but more for an investment, or maybe you call it a longer-term trade, given that, again, this was a company that got severely oversold because of the threat of the lawsuit, and we just felt like the company's not going to settle. They're going to fight this, and so bottom line is the company's doing really well. Stocks continue to go up, and we thought it was a good deal. It's still a good deal, and I think it still has more legs to go. When we look at interest rates today, interest rates came down. So, there's a lot of people that are, shorting bonds, and interest rates went up today, but people are shorting bonds. And, we talked about it the other day. If you look at TLT here, it broke out here, so I'm not convinced that TLT's done going up, meaning I don't think rates are done. I think they could be going down, and TLT could be going up. I know it's kind of confusing. Let me simplify it for you. Interest rates might still go down, and TLT might still go up. It was down today, but look, TLT was only down 0.3% today, and that was with a Dow up 175 points. So you're not seeing all that money flow out of bonds into stocks. You're seeing it trickle out of bonds and flow into stocks. So money's coming from elsewhere, probably from cash, but it tells me that people aren't real convinced yet that they should be just dumping their bonds to buy stocks. They were systematically doing that in the past few months, but in the last few days, perhaps seeing what Europe's going through and the stock market here, Treasuries may continue to go up. So continue to watch that. I don't have a position in Treasuries right now, but want to keep watching that. Apple on the day, that was another stock that was in the news. CEO Tim Cook had his shareholder meeting and basically said, discussed the cash and says they are, going to do something with it. And so the stock is, kind of bouncing all around based on that. And really, somebody mentioned it to me on Twitter saying, hey, instead of talking about all these neat things they're doing with their cash, why don't you talk about all the neat products that you're going to innovate, that you're coming out with that people want to buy? That's what people want to hear, and we're not hearing it. So the stock's just languishing around, as we talked about the other day. But it was in the news, kind of heavy volume today in comparison to what it's been the last few days. But overall, nothing doing with Apple. If you own it for an investment, I'm still staying long. But getting back to the market, just want to wrap up quickly here. Stair stepping down. If you take a look at this, and I'm not convinced it's a correction, and I'm not convinced that whatever correction may have started is over. This is the definition of volatility. Volatility does not necessarily just mean that stocks go up, or stocks go down. You always hear about volatility when stocks are falling, but you don't hear about it when it's rising. Volatility is the vibration back and forth, and we're seeing that right now. But you're starting to get this, going up 2 days and then going down big the third day. Going up 2 days, so tomorrow should be a big down day. But again, given that's the end of the month, we don't know what it's going to do tomorrow. The market's at an interesting inflection point. So again, what I'm doing is somewhat playing the middle. And then again, if we do get that big correction, then you can put more cash to work. On the flip side, if the market continues to rise, you continue to average in because the thing could continue to go higher and not have a meaningful correction. Maybe that was it. Maybe it was. And so what we need to look at is tomorrow's an important day to see is there follow-through tomorrow. If there's follow-through tomorrow and we get some real volume, some real intense buying, then we'll know that perhaps this thing has more legs and can keep going. All right, folks, have a great day. KarlEggers.com, Twitter.com/KarlEggers. eggerscapital.com, Google+, Facebook, iTunes. We're on all of those. Talk to you soon.